Good morning, traders. Today is Thursday, May 26th. And I'm Michael Boutros. Welcome to this live intraday strategy webinar on SB Trade Desk. We're about 30 seconds out from the release of durable goods orders for the United States, looking for an uptick on the X-transport. And more importantly, the order is non-defense is actually a good gauge of business investment. The headline figure is expected to drop from 0.8 to 0.5. We even got an upward revision of that already. So we'll see how big that drop materializes in the headline figure in just under 10 seconds. Good to be with everyone here in the room. Adam, Graham, good morning to both of you as well. Survey says 3.4, big B, expect some dollar strength here. Non-defense drops to negative 0.8, so a big drawdown there. And again, that's the gauge of business investment that the Fed likes to look at. So not very strong number there, but certainly the headline figure, 3.4% upward revision to the upward revision to 1.9. So a decent print overall on U.S. durable goods. Don't forget the main highlight and the main event for the U.S. docket heading into tomorrow. By the way, this is the dollar index. We'll be watching this right now to see if we get a reaction. But heading into tomorrow is going to be the second revision on first quarter GDP. Remember, that came in at just 0.5%. Okay, pretty weak. So we're expecting an upward revision of 0.9. Personal consumption comes out at the same time. We're looking for an upward tick there to 2.1%. And core PCE, personal consumption expenditure, the Fed's preferred gauge on inflation, also tomorrow, expected to hold at 2.1%. Remember, these are revisions for the first quarter. All right. Later today, you do get some pending home sales data. We got some really good existing home sales data earlier in the week, so we'll be looking for those numbers at 10 o'clock. Okay, so let's jump into price action here. Quick look at relative performance for the dollar heading into the U.S. session. Looks like this so far, pretty weak across the board, save the Kiwi, which is actually down 0.06. Not much of a change there, but you're seeing the CAD with a nice rally up 0.63. That pushed dollar CAD below our support structure. It was really disappointing for me last night. I was watching that trade. I did kind of dabble in there. I took a quick stop on it, but I'm still looking for possible support, but I think it's going to have to be lower from where we are right now. Aussie dollar, I'm still involved in that. I tweeted that trade out last night. We'll obviously go over sterling, sterling yen. We got those numbers this morning from the pound, which is up just 0.06%. You saw a pretty big drawdown this morning on the release of the UK data. GDP did get or didn't get upwardly revised or anything. We basically got the print that we were looking for quarter on quarter. The year-on-year number got downwardly revised from 2.1 to 2%, which was the, I want to say, what market essentially moved on. Capital formation, gross capital formation also came in way below expectations. So you did see a dip, but it came right into support and gave us a good reaction. Long story short, sterling is still in that key daily range, and we'll go over that in just a moment. What else did I want to show you here? Really quick look and update on Fed Fund futures. We've continued to track this. It was at 38% yesterday. Remember, this was building down to 32 today. And the July also dropping from 56% to 53%, the probability of a hike in these two upcoming meetings. So June is still continuing to be priced out, with the more likely scenario now starting to become July. Remember, we were talking about this just a few weeks ago with the expectations. The first expectation above 50 was down here in February. So you've seen a dramatic shift in what the market is pricing in for possible rate hikes from the Fed, and the dollar, in my humble opinion, again, has already shown us that rally. Okay, so playing catch up, looking at this from the perspective of the dollar index. This is the Dow Jones FXCM dollar index. Looks like we're flirting with a break to the downside of that basic trendline support. Forget that it's a median line formation, although it is a pretty clean one because we caught resistance and a 3-point touch on support. But the break now testing as support, former trendline resistance. So very simple, just following the lines, nothing too fancy. You did have Okay, it wasn't an outside day reversal. It was basically equal highs here, but you did have a reversal day yesterday. Again, today pushing below that basic trendline support. On the 30-minute chart, the thing I'm looking at is right here. You know, you set a weekly opening range. We talked about this yesterday. We continued to butt up against the opening range high. Here's the opening range low we made, and we're kind of just dilly-dallying there. If this was going to be a more concerted opening range break, you'd expect to see the run after a test of it from the underbelly. So at this point, I'm kind of sitting tight on the dollar. I think you get more price play on this tomorrow when you get into the GDP read, especially if personal consumption or PCE misses. Okay, if PCE comes off way beyond the expectation for 2.1%, basically that's going to be the nail in the coffin, I think, for market participants pricing in a rate hike next month. If anything, that should make the July a little bit more solid because, as we know, of the Fed's dual mandate, inflation remains the laggard. And if inflationary pressures are just simply not there, it's going to be very tough with what's going on globally to justify a rate hike. So we'll watch those numbers tomorrow, again, 8:30 here in the U.S. Hi, Mike. Morning. Can I take a look at EuroCAD later, Joe? You know what? I haven't checked out EuroCAD in a while. It's funny you asked that. Yeah, but we'll definitely check it out. Jotting it down right now. We'll check it out. As always, guys, throughout the session, if you have any questions on anything we're discussing or specific periods you want to look at, feel free to post them on the message board. Also, quick reminder, the camera button if you need to take snapshots of any of these charts. All right, so that's the dollar index. Expecting to see a little bit of a rebound here, but broadly speaking, I want to see if this median line resistance that we broke through holds, or median line support rather that we broke through holds as resistance, and off that you would look to play a little bit more of a downside move if that holds as resistance. The weekly open is pretty darn close to where the median line is at this point. So from the index standpoint, still looks like a little rounded top pattern that we're working with here. A basic 236 of the advance takes you into the figure, basically, 11,905. All right, so heading into yesterday's piece, we talked about the sterling. It's trading just below the 2016 open at this point. We talked about sterling yen. That's still holding structural resistance. We talked about dollar CAD. Again, that breakdown of support is kind of the focus for me at this point. We'll go back and look at some trades that we were examining earlier in the week on sterling CAD, dollar yen, Aussie, and euro. All right, and for sure, Joe, we'll take a look at euro CAD. So first things first, British pound. Okay, so that pink line or magenta line you see there is the 2016 open. We talked about this a couple times during the webinars this week. The trend line break you got here in that momentum trigger. Initial resistance was right here at basically the high close, which was also very close to the February high, and the 2015 low day close. That came in right at 146.71. That's now near-term support. Here's what it looks like on the 30-minute. And here's what we looked like last night. Okay, so we had missed that tag of the 2016 open earlier in the session. It came off. We rallied right back into it and finally did achieve 47.31. The data came out for the UK. You got that slam to the downside. Look what held as support. Again, that 46.80 into 46.71 region. That's still the main key region, guys. Okay, that's still going to be our near-term support structure. As long as you stay above that, you want to respect the long side. The near-term bullish invalidation is going to be 46.33. Okay, at this point, you're basically just looking at that median line as support, specifically because we got the break, support, support, looking for a tag of that resistance. Again, on the way down, you should find support along this line. Now, what I was noting here is that you were seeing some divergence into the highs. So I'm still a little concerned about that. And I do think you possibly get a break below this region to run into the median line. You're still getting that divergence even now after the high we made last night. So here is the diversion signal that we highlighted here. Okay, that was right here before we turned over. It wasn't really too big of a drawdown, but now even with the subsequent high that you've made in price, momentum has continued to make lower highs. This is another divergent signal there. So remember, with these divergence signals, the biggest issue is that you can mark divergence for days and days and hours before it actually turns. So divergence gives us nothing as it stands to timing. But what it does tell us is that the top side momentum, the push, the thrust, is starting to get a little bit tired here. So look for this support to settle somewhere in the 46.70 zone. If it doesn't and you see a breakdown, the 50 line is there for the broader structure that we're following off the lows. So if it does break to the downside, look for that final support here at 46.33. Really nice level. If that doesn't hold, I wouldn't want to be looking for long scalps at that point. It kind of be neutral, seeing if we get a hold of the lower median line parallel. This is an embedded structure, but I think it's been holding pretty well. Okay. Now, on the top side play, the big region that we really want to focus on is 47.67, about 100 pips away, right here. You're not only looking at the highs that you made for the month, but you're also looking at the upper median line parallel, and more importantly, the 200-day moving average, which comes in just higher right here. So obviously I don't have the embedded slope in this chart, so it doesn't get too messy, but you get the picture. Okay, there's the monthly high, 200-day moving average comes in at 147.76, and then again, structural resistance with that upper median line parallel. So levels super clean still on sterling, okay? And on account of the opening range break, objectively for the week, you'd look to achieve that late Thursday, Friday high. So be a little bit more cautious here for a near-term pullback, but the broader objective remains looking to buy on a dip. Questions for the pound? You're spent on data for the rest of the week on the pound here, so you're pretty much just focused tomorrow on dollar price action. All right, moving right along to pound yen, a much bigger ATR. Just want to remind everyone. So yesterday when we posted this, that actually ended up being a pretty big swing low. It swung right back up, and we're kind of still holding the same range, very similar to what we're seeing in sterling dollar. A decent trade if you're holding a lot of long dollar exposure as sort of a hedge, if you will. You can take some short scalps on this one, I think. I was looking for a move into 160.50. Ultimately, again, we're counter trend trading here. Ultimately, we'd only be looking for the pullback to offer some better long exposure on pound yen. Now, the yen's been acting a little funny, and the yen does yen things, so we have to be very weary, but the technical structure is there. Here's what we were looking at earlier in the week. That median line off the lows, tagged it perfectly as resistance yesterday, came off, okay? And the broader trade stays constructive, but you're testing a lot of structural resistance, basic trendline resistance off the highs. Forget that's the median line, just a basic trendline resistance. And then the median line off the lows. And then if you go way back to this structure, that sliding parallel off the yearly lows converges right there as well. So you're coming into some pretty big levels on the upside. I don't necessarily want to call highs on this or reversals yet, but this is where you would start to look for it to be a little vulnerable, and that's what we were getting when we were looking at this yesterday. You're marking, again, some strong divergence into the highs, and that continues to be the high that holds. Came back yesterday, an overnight trade. He tried to clear it again. Again, that median line caught the highs, so I still think it's vulnerable for a move lower, but ultimately we're bullish. The old opening range for the week was bullish. The broader trade remains super constructive off the yearly low. It's just that we're at resistance. So I'm looking for a pullback to give me some better long entries, or if we clock this thing to the upside, I'm concerned and I wouldn't start chasing it. That's why I want to see a pullback so I can get back in. You have 162.80, which is obviously the monthly high from April. But more importantly, there's a fib confluence, or a confluence region, I should say, up here. You got 163.50. You got 163.83, which ends up being the 2014 low. I know it's a weird level. And then you got 163.96, which is the swing low for the opening range of the year, basically the January low. And that converges on this lower median line. So big levels, okay? I don't want to go way too much into the longer term stuff, but basically key levels coming up for possible resistance on the yen. I would love to see this thing cross 64. If we get through 64, I think, you know, you guys better be ready for some rip your face type of rally. But in the meantime, vulnerable below these levels, I'll be looking for a reaction, for a inflection off this to the downside, possibly for a test of support to get back on the long. But I still do like the trade, and the levels are pretty clean. Last week you spoke about looking for exhaustion points for entries on these non-dollar crosses, sterling yen. Can you talk to me more? Can you talk about that more? Relevant here? It's not really relevant here, Eileen, because I'm still looking for the long side. I'm not looking for an exhaustion point on the sterling yen. The exhaustion that we were looking for last week, Eileen, by the way, we got. That was it. That was it. We got a lot of exhaustion points in the yen crosses in general. But this was the exhaustion pullback that we were looking for early in the week, if you guys remember. If I can draw your attention. Sterling 23rd. I think this was it. Yeah, so we were looking for an exhaustion low here, looking for a low early in the week, and we said this could be it. Actually, this is the sterling one we just went over. That ended up being the low. So when you got to keep the time frames in view, Eileen. When I'm talking about an exhaustion low, we're not talking about a reversal for the trend. We're talking about an exhaustion for the immediate move. So for the immediate rally, you'd be looking for that exhaustion move. You're looking for an exhaustion low early in the week to get the pullback to get back on the longs. I didn't personally get the opportunity to get back on the long here, but that was your early week low, early week exhaustion low in sterling yen. Same thing here. I'd be looking for sort of a blow-off possible exhaustion, but on this one, I wouldn't necessarily be looking to play the short because that's against the dominant trend. On this one, I'd be looking for the reset to get me back on the long side. Keep in mind, you know what, this is a good question to move over to the dollar yen, because sort of what the yen's doing is going to be the basis of whether we look to play the breakout or the reversal play. So you look for the basing in the short term, right? Not even the basing, just for the move to spike into an emotional high, we call it. So let me put it this way, Eileen. Think about it from the psychological factor. I guess wanting to be able to see when the exhaustion happens. So think about it from a psychological factor, from a trading standpoint. The market's rallying. The guys who missed this rally, they're looking for a pullback to get on the long side. Okay, so they get the pullback as traders are closing out long positionings. You can see, again, major levels of support and resistance. That's what we look for. That's what they're looking for too. We get back into here. Now they're looking at entry on the long. Some of the hands that were in the long from here start clearing out. The psychology of it is that when you come into a major resistance, structural resistance, Fibonacci resistance, long-term moving averages, and the market's been in a severe, really strong move to the upside, you start to get capitulation, right? We're now, same thing. On the spike to the upside, the shorts are closing in now, or the longs are closing those positions. Now on this pullback, it overdraws support. Everyone wants to buy to get back on the long, right? But as it starts to move back to the upside, the guys who got shook out here get shaken out of the trade. So they start closing their long positions. Then the cascade effect happens. This exhaustion is when the market has been on a really strong upstretch, and that last spike, and especially if it happens on data or news, happens into a major key resistance. That's when you look for the exhaustion. It's very unlikely that the market's been rallying and rallying and rallying and we have all this thrust behind it, and then the data prompts a new leg higher without some sort of pullback. Does that make sense from like a psychological factor of what you look for in exhaustion trades? Hi, Mike. So for sterling yen to enter long, what is the point of interest to enter long as of today's chart? So for today's positioning, the initial support you'd look for would be right down here still at 160.50, 160.41. See, so there's two scenarios how you'd get into the long on this one, Joe. You'd look for a pullback into support to get back on the long side, or if we break this big key region on a pullback and test as that former resistance as support would be a decent entry on the long. So for example, something like this, right? You miss the breakout, the market pulls back, test it as support, test it as support again, stop against the lows, move to the upside. So if this thing breaks to the upside, comes back, gives us some basing, I'd like to initiate a position there against the long. But in general, you're coming in some pretty big levels, so keep these key targets in view. Basically 164 and 162.67, 162.68. Does that make sense, Joe? Eileen? He says, okay, got it, thanks, right on. I'll keep my eye out, Eileen, for more examples, as it were, of near-term exhaustion highs and stuff that we're looking for. It just, it's nothing, I don't want to make it more than it is. It's just a point at which, the market push, the rally is coming in some major key targets, and you expect to see that spike. Remember, guys, the market's always going to do what it can to screw as many people as possible. Okay, the market does not reward the masses. So think about it logistically. On a spike like that into resistance, yeah, you're going to get those guys who automatically on price action are watching 1-minute charts and they say, oh my God, it's a breakout. Start piling into the longs. That's when the market's going to slam it down. It's exactly when the market's going to slam it down. So you want to be wary of those types of moves in the market. Same deal here, right? Right into structural resistance on divergence. That's an exhaustion high any way you slice it. And that's why I was saying on this to begin with in the webinar yesterday, divergence into a failed break, a failed break of the structural resistance level that we were looking for on divergence. So still the momentum couldn't even pick up even though price was breaking through resistance. Still leaves it vulnerable. Okay, thanks for more examples. Seems like there is near the resistance and its base a bit, but helps with a bit more explanation. Yeah, I'll keep an eye out for you, give you more examples of it. Any questions on sterling yen before we move off? Okay, do want to take a quick look at dollar CAD. And then we'll move into Aussie. It looks like Aussie's on the move right now, actually. It looks like it's moving higher still. As a disclaimer, I'm still holding that long from last night. We'll go over that in a moment. But what's interesting is I kind of had both of these positions in play, and I started to slice this off as soon as I saw that we were breaking this support that we were looking for. So you guys remember this chart? We've been following this since Sunday. You had basic trendline support, very similar to what the dollar index in and of itself is doing, oddly enough, even though the loonie is not included in that Dow Jones FXCM dollar index. But nonetheless, see a break of basic median line support. It's also a basic break of a 236, excuse me, retracement off the lows. This 236 retracement, excuse me, which converges right on that lower parallel, that's the 236 from the highs of the year. So it's the yearly 236. You've seen some nice pivots there. The high that you made in that late April swing. And here we are breaking below it. That was basically that one, what was it, 129.98 level? 129.85 level, I'm sorry. And that kind of sealed the deal for me. If we were going to see dollar CAD continue moving higher on this immediate rally off the lows, in my opinion, that was the level to hold. So where do we go from here? Look for initial support at this point right at the 129.09 level, a basic 38.2. In fact, if you do some slope analysis on this, and this is as basic as it gets, just basic trendline resistance, extend it to the highs, really nice pivot, support, break, resistance. Again, we'll take another slope off that most recent high off that Thursday high that we made last week, and you can see we're kind of probing in that level right now. So near term, yeah, you could find some support here. On a rally, I still wouldn't be looking necessarily to get back into the trade. I'd need to get back above the median line formation we just broke. So essentially, something like this would need to happen for us to get back on the constructive side from a scalping standpoint. This, for me, suggests that even if we do get a near-term rally, you'd look to sell that into a new low before sort of a continuation higher. Any questions on dollar CAD? So I know swing trades are in it looking for a move or looking for a stop of 28.80. And if you take a look at this on the near term and where that level ends up being, that's right around here. A decent pivot in price. I'm going to go ahead and mark that. Hey, you're more than welcome. Appreciate that. For the dollar CAD. So again, near term, you're coming into some support right around 129. Resistance still remains at the high that you made last night in Asia, 129.85. Would need to get back above 130.15 to get back on the constructive side of the scalp. Again, keeping everything as objective as possible, to hell with what Mike Boutros says or anyone, as objective as possible. Weekly opening range, set a low, set a high, check the low, back at the open, break the lows, you look for a Thursday, Friday low. I was kind of wishful thinking here, kind of trying to take an entry, even from a scalping perspective after the weekly opening range broke with such fervor. I just thought this confluence would give us a little bit more of a bounce than we're seeing. In fact, we broke it as support and tested as resistance, so that's as clear as it gets. Look still for entry a little bit lower down from where we are right now. Questions on the loonie before we move off? Near-term break of support. Got a little bit more on a bounce here. I think you do see a little bit more of a move lower, but broadly speaking, the trade remains constructive. Keep in mind, we've broken out of a multi-month, essentially the entire year. A couple of formations that we've cleaned, a couple of slope resistance levels that we've cleared. So clearly, I'm still looking for a broader rally. It's just near term, you're at risk for a bounce here to get into a new low before we do reverse. So we've gone over sterling, sterling yen, dollar CAD. How about sterling CAD? And here's what that looks like. So another one that we presented earlier this week that came into this resistance, confluence resistance, saw a clean hold. That was 191.98, basically 192. And the pullback, okay, was this first indication that you're going to run into some trouble here. Look where we topped out yesterday. We were talking about this. You guys remember this way back, 2009, we were laughing, 2009 high and 2015 high day close. That can't be right. Oh, the February high day close. That's exactly where we capped out yesterday's advance. On divergence, mind you. Price action making a higher high, the oscillator making equal or lower highs. Okay, so very similar scenario here. And again, if you take a look at the sterling CAD scalp, this is the formation that we were looking at. take a simple parallel of that same slope off the low from March 31st. Look what just caught the highs. On divergence, mind you. We're right back at the weekly opening range low, former channel resistance. At that point, now that we've had a reversal shift and a change in behavior and momentum, this is where the new retracement starts to come in handy. We start to have a little bit more conviction on the levels that you would get involved in on a scalp. And if we do this properly, the 236 should come in right about looks like we're trying to make a move below it right now, but you get the picture. So pretty clean here on Sterling CAD as far as the downside targets. Again, a wider range ATR, guys, gives you 40 pips. So just keep that in mind if you're getting involved in these positions. These soft targets have offered some really nice pivots in price over the last few months. So I do have them on here, but the range is so big. So just use them sparingly. If it does break to the downside, I would expect to move back towards 188.85, back towards 188.42. Broadly speaking, I would be looking to buy those dips for a larger move to the upside in Sterling CAD, specifically with our, with our biases on dollar CAD broader to the upside and sterling dollar. This thing has the potential to really rocket. But as it stands right now, this full round trip turn and failure at the upper parallel, certainly this is an example, Eileen, of something that's screaming exhaustion, right? A reversal day into resistance on divergence. I interpret that as exhaustion. And not only that, on that reversal move, if we do clear the weekly opening range low, okay, then that's all the sort of confirmation you need, at least, for near-term short buys. Candle spike on the daily, Sterling CAD for the exhaustion. It's not just because of the candle spike on the daily. It's, guys, we want to look at what price action is doing. We're not interpreting candles. I'm not necessarily looking for harami and all this and trying to label each candle. That's what my bias is. No, I'm looking for how price reacts. So aside from it being a big spike, right, and a big wick, big wicks are always sort of flags for exhaustion. Look at price action on the near term. Really strong reaction off that region. It's structural resistance. You have divergence. The move has continued to give you very, very small reversals, very small recovery. And not only that, but I was about to say is that move, if it breaks below the weekly opening range low, i.e. here, the weekly open, that's checkmate for the near term. And in my interpretation, you'd look for a little bit more of a correction lower before a bounce. I just want to check this out. Give me 2 seconds. It's kind of just staring at me here. Okay, too early to tell, but we'll come back to that. In any event, you're at support right now. Okay, if you get actually a decent long trigger off of this on the opening range break for the U.S., it might be a decent bounce. You're still holding within that range, but like I said, near term, I still think you're at risk for a little bit of a setback before this thing starts to move higher. All right, Sterling CAD, my notes say coming into support, uptrend support. So watch that region into the weekly lows. Okay. Quick notes on dollar yen, and then I want to jump into your Euro CAD. Cool, my noggin is waking up for these. Thanks for going over these and more. You're more than welcome. So Euro CAD, or dollar yen rather, and then I'll go into the Euro CAD here for Joe. Dollar yen looks like this. I'm not really impressed by anything on the daily chart, so I'm not going to spend too much time on this. All I did want to note is that trigger that we were watching earlier in the week did offer some support and a bounce. So ideally, this thing gives us a hold of support and looks for a rally into 111. That being said, the near-term chart has us basically unchanged on the week. It's really kind of annoying. We came into the weekly open here. Here's the U.S. data print we just got on that spike into the highs and reversal. But largely speaking, we're very, very, range bound here in dollar yen. I have cleaned up some of these levels a little bit. And what I wanted to do with you guys here in the webinar is finally get rid of that long-standing slope. It's served us well so far, but if we're going to get serious about trying to really get more aggressive on dollar yen scalps from now on, we're going to need to clean this up. So let's go ahead and do that. Okay, and in fact, this basic trendline support, I'll bet, is pretty close to, not bad resistance. Okay, the breakout level we need to clear would be here. Weekly opening range high, former channel support, and the breakdown level remains unchanged. Still here. Here it is. So I just want to show you this. This is the update from the 17th that we were following, just to show you where we are still in price. It hasn't changed all that much. This is the same support barrier that we were watching. We came back, tested it earlier in the week, tested it again yesterday, right? And now this key range, which we were looking at as resistance, that's this. Now it's support. And it converges on that same slope. So if we were looking at this in time, we're basically right here in price, where this trend line converges on that key range. So, for me, it's a simple pivot. Okay, 109.40, 109.46. Actually, it's 109.38 to be exact, and 29.46. That's the major key support. A break above the weekly opening range high. Again, objectively, that'll clear the weekly open, which is at 110.09. Would give us the continued upside bias here. Big resistance, or not big resistance, let me take that back. Structural resistance or confluence resistance into 111.16 would be the first target. That's a basic 88.6 of the most recent decline, but it's also that basic trendline resistance or that slope resistance of that same slope that we were following for so many months, since last year. Support, 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 resistance, resistance, nice pivot, current channel resistance. Yesterday you mentioned to watch the Aussie close. Can you discuss why and what occurred? Says Rick. Sure. Let's jump into, well, before I do want to cover Joe's question on Euro CAD. So any other questions on dollar yen? She's an ugly trade. I haven't taken anything on dollar yen. Any yen trades I've been taking, I've been trying to take by way of sterling because I think I have a little bit more clarity on what the pound's doing. And, I still like dollar yen higher. It's just this is looking a little bit tired. We want to hold above this region. We need to clear 110.39, 110.40 here to get through the highs. Euro CAD for Joe. So Joe, we've been covering the euro. I know that you've been following it with us here, right? As far as the euro is concerned, I also tweeted this chart out last night. This was the barrier to break for a recovery in the euro. And we're getting it, right, on this dollar pullback. So that support structure that we tweeted out, that held as far as momentum, so you never got the trigger. And here we are at the 100-day moving average, which was support twice on those drops in European trade and into the open here. So this topside move certainly near term alleviates some of the downside pressure. I do think you get a rally back into, we might have already got the weekly open. $12.05 is the weekly open. Yeah, you clipped it. So you're basically there. On the initial target, the next topside objective, like I said, is the weekly opening range high, very objective. That's 112, right in the range of 112.40 and 112.41. And then you have 112.85, which is that long-dated 1618. But more importantly, it's just that nice pivot in price. That's a weekly low and a nice pivot last week that we made right off that region. So Euro looks like it had a nice breakout here, right? And we went over the CAD already. So here's what Euro CAD looks like for you, Joe. Seems like every time we get late in the webinar is when this computer starts freezing up. It's like post 9 o'clock. Okay. Euro CAD, huh? Let's see what the near-term chart looks like. All right. Looks pretty clean, actually. That would put us at support right about now. Take a retracement off the low here, see if we're at any interesting ratios. $618 is just lower from where we are. So like right around here, Joe, is where I'd start to look for a little bit more concerted support. That would be really sweet if you make it on another spike into that region on divergence. That would be an example, Eileen, of a near-term exhaustion low. And while, again, you wouldn't want to get too aggressive on a long from there because we're obviously in a sort of correctionary play here, it would give you that near-term reversal sort of indication. And let's take a quick extension off that high, see if anything lands right on that mark. Okay, if you get that topside break and you clear 145, essentially 144.95, and that's an if, here's what the retracement levels would look like. And I just want to see if there's any overlap on the 618. Wow, okay, that's sweet. All right, so this is what I would do. With the ATR on this is about 35 pips. Keep the 50, dodge that 46. Okay. Okay, and what I like to do is I like to put the levels in gray until I have some validation that that's the low. Because listen, fibs are very tricky with people who, I told you about this earlier, like when they start to just tack it to the most recent low, then they make a new low, then all of a sudden they tack it to that low, start targeting, now all of a sudden that's their risk to reward. We don't want to be like that. So I have no way of validating this is a low right now. It's just a simple bounce. If we get the trigger break and you get this mounting a break above near-term resistance, that's a different deal. But right now, these are what the targets would be, Joe, for me. I do have us rebounding off of a near-term structural support. That's a pretty decent and conviction slope just because of the mere sheer amount of times that we responded to that slope. 1, 2, 3. I would say that's a 4, 5. Support now, support now, support now. Extend that same slope off the lows. That's basically where you bottomed. So one last thing is we'll add the 50 lines here just to give us some reference on where we might find some inflection. That's pretty clean. Okay. So we'll work with that for now, Joe. Does that help? He says, okay, clear. Thanks, Mike. Yeah, you're more than welcome. More than welcome. I'm just not crazy thrilled about the daily chart, but from a near-term perspective, which is sort of my gig, I guess, does look like you're in a little bit more of a correctionary stance. I'd be looking for some support into that lower parallel before mounting a like rally towards, essentially towards the 618, but like 45.65 would be an initial good target. Those lows, that 38.2, the median line, and that would be sort of your near-term resistance you would look for on a bounce. So that is Euro CAD. Let me cross that out. What was the next concern? Was Rick? Which pair did you want to check out? Oh, yesterday you mentioned the watch the Aussie close. Can you discuss why and what occurred? Sure. So here's what the Aussie dollar looks like. And the close, my friend, we were talking about was 71.44, 71.40, if you remember that zone. You were looking at the lower median line parallel. You were looking at basic channel support. You were looking at the weekly opening range low made on Tuesday. Okay. You're looking at the lower parallel for the current structure of the descending pattern, right? And this is what we were talking about. Okay. Gary says, what the hell is going on? Random. Just joined the room. Sorry, dollar yen. So we got the release of that data, and it looks like dollar is reacting pretty poorly. You did get a mixed print across the board there, Gary. I'll go over dollar yen in a moment again if we have time. But for the Aussie, Rick, what I was telling you to watch the close for was a couple of things. A, remember, all these momentum oscillators only react or only get pegged on the close of the candle. So until that candle closes, nothing in recent, in the oscillator in general matters. Once the candle closes, then it gets pegged there. So when you're trying to assess a break of trigger resistance or trigger support, you need to see that candle close with that line below to validate the break. You got that yesterday. Okay, we did close above that 3-point resistance trigger in momentum. Price as well did close well above that key region of support we talked about. Here's what it looked like on the 30-minute chart. Excuse me. And basically, this is kind of self-explanatory, guys. I tweeted this out last night. I'm not sure if you guys want to have any specific questions on this. I'm still holding the rest of that scalp. Here's what it looks like, I guess, on the 5-minute chart. So there, Eileen, there was a trigger from last night. Momentum was holding right along 40 on this 5-minute for a while. Then you saw that break. I didn't get the break, obviously, on this spike, but when momentum came back and checked that trigger as support and held, that was my entry. Stop was right against that low. Now, don't mind that. I was just, adjusting my leverage because I was in another position. But the ATR is 22 pips or 21 pips. So as soon as we hit the initial ATR, took off a portion of the trade, that's when I told you guys on Twitter that, I was break even, still am, and we were looking for a stretch into 72.50, which is the initial target right here, 72.53, 72.52. I put all my targets on the inside. We have this one at 72.50. So on a trade like this, again, you're only trading still within the confines of the weekly opening range, still, right? So here's your weekly opening range high, and here's the yearly open at 72.81, and that's the breakout in my mind. On a close basis, same thing here, Rick, that would validate a little bit more of a presumptive rebound, inflection, recovery, whatever you want to call it, in the pair before we start to move off again. So don't forget, you also have the 200-day moving average, 72.52. So that's up and coming right along the same region that we're looking at. See if we can't get that test of it here on this stretch. Rick, does that help? He says, thank you. You're more than welcome, man. You're more than welcome. So with the daily charts, you just want to be mindful of those two things, right? When you're looking at the oscillator, it's all about the candle close. Same thing with the 30-minute, right? You have to wait for this 30-minute candle to close to validate any type of break or any type of trigger in momentum. But also, from a price standpoint, we've continued to hold that major key confluence pretty well. Near-term resistance, 72.50, backed by 72.82. Questions on Aussie dollar? See it, Aussie dollar trigger. Many thanks. You're more than welcome. More than welcome. Sterling CAD, Euro CAD. Okay. Hussein says, please don't forget about oil. Coming right up, my man. Here's what oil looks like. I mean, sort of beastly, but here's what it looks like nonetheless. This thing's a giant, okay? The pullbacks have been pitiful. So you really, I mean, from a near-term trading standpoint, I got nothing to do with this trade. If you're holding long exposure, the next area of interest that we talked about yesterday was 49.49. We hit that. Now the next one is basically the high they made for October. But right after that is a 100-day moving average from the ascent off the yearly low. So here's your 2016 open. 2 equal legs up from that low takes into 51.06. Just beyond that, median line off the lows and the upper median line off the highs. So I'd say like this whole region is more of a key zone than necessarily 51 in and of itself. But that being said, if you're not already long, you got no business being in this trade, in my humble opinion. Hussein, makes sense? Does that help? He says, thanks, more than welcome, sir. On that, obviously we have to go over gold because this thing's been textbook. Here's what gold looks like on the daily chart first. Okay, Nothing's changed as far as the levels that we've been looking at here. We simply rebounded off of the median line, off the highs. You know, at this point for the rally, it's testing former channel support turned resistance. Okay, initial resistance here on this rebound. Now, if the dollar pulls back with a little bit more fervor and we do get a break to the downside in U.S. trade today, I would expect that gold might recover a little bit more. Here's what the 30-minute chart looks like again. For gold, same levels that we were looking at on our radar charts a couple days ago. Same slope, nothing's changed. That slope to the downside, it got a little dribble. Remember we talked about 1221. Did I label these? No, but they're the March, April low day closes, if I'm not mistaken, and got a little dribble below it, but it held on the way up. Resistance, resistance, come back, checked it as support, and they're playing these levels like a fiddle. Right now, resistance is going to be right here, basically the spike high that we just made. A break there, you'll be looking for a recovery back towards like 1237. That's a little bit more where I drop my bearish invalidation to at this point. Remember, our bearish invalidation yesterday was here, looking for a recovery to sell. Now that we've moved forward in time, following the slope, we'll go ahead and drop that down to 1237. All right, so might have a little bit more of a pop to go here in gold before it turns over again, and that would kind of make sense with some of the dollar pullback we're getting. But broadly speaking, you're still bearish on the trade till we clear that level. Any questions on gold? They're going to keep making commotions about this, guys, and the more commotions you see on the headlines, the better the trade continues to perform. It's hilarious. So we'll continue to follow those headlines. Any other questions on gold? Last look at SPX. This is something we've been following as well. Again, from that same update, here's what the SPX looked like earlier in the week. We talked about this on the breakout, and well, at this point, we were testing the weekly opening range high. And this is where we were yesterday. The close above it validates a basic and simple monthly opening range that does shift the focus to the upside. Note that on that rally, well, actually the breakout was on a breakout of channel resistance for the trigger here, but nonetheless, initial targets for me, this is just a simple swing high here, so I'm not really too crazy about it, but I do think you look for a tag of the yearly high day close for 2016. That comes in at 2103. Right here, it was made on the 20th, 420. And then the record high day close from last year comes in at 12,125. That's a ways away from where we are now. What would shift our focus lower at this point in SPOOs would need to be a break back below the yearly open, specifically with that slope there now. That's where I would need to clear to get back on the short side or to flip the bias back level lower in the SPX. Note that you're still marking, you'd still have to make a rally into 2,125 to even check the high day close, let alone the highs. So on a break of the monthly opening range, if this is legit, objectively, you would look to stay constructive above that region. Any questions on the SPX? We covered Aussie. Got that one. Dollar CAD. It's going to turn right ahead of target, isn't it? We'll see if we can't get that stretch into U.S. trade. All right, guys, if there are no other questions here, we'll go ahead and wrap things up. Euro dollar, or did I miss it, says Pete. We touched on it briefly, but I'll take a look at it for you. I mean, the euro is very similar in where it's trading. We did talk about it. I tweeted you this chart last night, guys. No changes to the levels. So the basic premise here was resistance at 111.78 into 111.87. Slight adjustment to the levels we were looking at earlier in the week on just this region. But now that we've cleared both the lower median line the upper, median line parallel, which is now offering some support, And we've made it through 1217 is the open, I believe, for the week. Let me just double check that. Open 1205. We just checked this. 1206. I'm sorry. 1206. 12059 is exact, but whatever. There we go. Oops. So yeah, objectively, you'd be looking for a stretch here into the weekly open. And if that breaks, then that's an objective trigger in and of itself. You'd be looking for initial targets at 1285. And again, very similar to what we just talked about is the fact that now that you have that conviction behavioral change in momentum, a break of resistance in price, this is when your basic fib retracements start to become viable targets. And a basic 236 takes you into same level, 1243, 1241. What's 2 pips between friends? Pete, does that help? He says, thanks, happy holiday. Yeah, thanks, I appreciate that, guys. As a quick reminder, obviously Monday is Labor Day here in the United States, so U.S. markets will be closed. Don't expect any updates from our end until about Monday night. You want to get a full cycle around the markets to see the open before you start making any major assessments. If you have open positions on, it's not a major, oh my God, type of deal, but just be mindful. Be mindful of your leverage. Make sure that you have your proper stops as you get into the open after a long extended weekend. Sometimes, you can get the spreads blowing out, or you can get a big gap. We don't want that to affect anyone's positioning. So just be mindful of that as you head into the close today, or excuse me, tomorrow. I think it's Friday already, but yeah, it shouldn't be too crazy on the Sunday open this time around. But for the euro, I'd look to stay constructive near term, looking for that rally into the highs. It's basically the same setup I'm looking at in Aussie, right? So that long positioning, looking for a move into the objective weekly opening range high. And if we do get it, I'd be looking to take off again the rest of that position from last night. Depends when it happens. If it happens late in the session on a break of the session opening range, maybe I'll leave some on here and look for a stretch into that yearly open. But very similar scenario here in Aussie dollar. CAD Yen says, Sophia, haven't taken a look recently, but that won't be for long. Whoops. Yeah, so I would have us at resistance right around here. And that bodes well for dollar CAD finding a low and finding some basing for a dollar CAD rally, some CAD weakness here. But I do have us coming in some resistance on a couple of different accounts. So Sophia, peep this real quick. Here's your monthly opening range high. What's this 85 level? Nothing. Okay, that's your opening range high for the month. Here's your May open. Converges right here on the upper median line parallel. That's gotten some really nice play off the slopes. Resistance, resistance, break, support, support, support. Should offer some resistance here. Let's clean this up. Actually, no, I'll leave that there. These slopes are messed up, need to be adjusted. So let's go ahead and just drop some new ones. Okay. Okay, and one other thing I'd want to check out, and again, I'm just going off the fly here, Sophia, so sorry, just bear with me. Is an extension off the low here should be a little telling, specifically if we've got any play off the 618. Looks like we are too. Okay, so initial spike into that level saw a pullback, then the break saw support. Doesn't mean it's going to hold, but just the fact that you're getting some play off that level puts the 100 in play, puts the 1618 in play, and that's typically how I like to validate, whether an extension is actually something I want to be targeting. So you see that the 100 here converges on that 618, somewhere around 86.25, 86.10. That would be like sort of the max I'd want to see this thing extend if in fact it is moving lower. Like I wouldn't want to see it go past this on a like major emotional stretch, like a big spike. That being said, it made an opening range break to the upside for the week. So you're looking for a Thursday, Friday high. I wouldn't necessarily be looking to chase the long side on this. I'd be looking for that rally into one of these regions to offer a short, in my humble opinion. Sophia, does that help on CAD yen? Is there anything specific you wanted to address? Are you in a position there, or are you just kind of looking for direction? He says, no, thanks, that's it. All right, yeah, so look for some near-term resistance coming into these highs. Again, keep in mind, aside from what we just looked at with the weekly opening range break, which was a clear break, retest as support, and move off, the monthly opening range comes in just higher. Okay, so I wouldn't get too excited about the long side unless we clear that on a more objective basis. But I'd be looking for some near-term resistance coming up on this rally. Real quick, sterling yen, but area. I'm sorry, what does that say, Kelly? Oh, buy area. All right, no, I definitely read that wrong. I'll tell you that much. Let me let me bring the chart up. So for sterling yen, look for near-term support 160.41, 160.50. This region right here. Nice confluence. It's a Fibonacci confluence of a 236 basic retracement off the highs. And again, last night was when we added this retracement with a little bit more viability and a little bit more confidence because of the reaction of price made off of that key level. Again, Eileen, I don't know if this was one example that we used, but near-term exhaustion high. So you'd look for a new low in price on this type of correction lower. In fact, just to put things on a little bit even more of an even keel, this is a larger range ATR, so we can do stuff like this, is just an extension off this most recent decline. Ooh, hot potato. Look where that 618 and 100 comes in. 161.17, wouldn't pay too much attention to it, but this region right here, just above the support region we've been looking at. So extend that, into 56 there. And that would be sort of simple two correction, two equal legs down into support. But that'd be the first area of support I'd start looking for. Feel free to take a snapshot of this, Kelly, for your own. Actually, it's on last night's update. It's the same exact chart. No change to any of our levels, but that's the 30-minute. And here's the daily. Dialed in. Thank you. Have a great day. Have a great Thursday. Kelly, same to you. Eileen, same to you. Pete, Adam, I appreciate all your comments. Hussein, Sophia, Gary, I think I got your dollar yen, right? Yes. And Joe, obviously. Mark, Mahdi. I'm not going to get all your names, guys, but thank you so much for your attendance. Best of luck trading. Again, we'll have an update tonight, but tomorrow or heading into the start of next week's trading, probably won't be anything on the site until Monday night when we really start to get things gearing up for the U.S. Open. Till then, best of luck trading, guys, and we will see you next week. Cheers.